Imagine this. A single number controls whether you can buy a house, get a car loan, be able to get your dream job, or even qualify for government programs. Sounds crazy, right? The kicker is this number could actually be wrong without you doing anything wrong. Well, welcome to the bizarre and often wild world of credit scores. Today we'll be taking a deep dive into how these scores are calculated, how these scores work, why they're everywhere, and the question you all came here for, what is a good score? Buckle up, this is going to be a good one. If you're new here, my name is JP. I'm a 12-year banker. I help people improve confidence in their finances. Credit scores are everywhere. Your landlord checks them, your employer checks them, your banker checks them, which brings out the question, who is actually in charge of creating them? Because this is the most important number, second from your social insurance number, that will determine the future in your finances as you go along building wealth. Your credit score is not just handed down by some wizard in the sky who really is well versed about your finances. It is calculated by two specific companies because of the information they receive from the vendors that you use. These two companies are Equifax and TransUnion. They receive information from everywhere that you borrow or you interact with, and then they compile it into what is called a credit report. Now, a credit report contains all the publicly available information of you and how you have been behaving in the financial markets. It is starting to go a little bit above and beyond the financial markets as the tool itself, the credit score, has been used for verification and has been used for identification above and beyond the granting of credit. I know what you're thinking. That's a big responsibility to have, right? Yes, this is a big responsibility and opportunity for Equifax and TransUnion because every time somebody accesses your account, whether it's a bank that is considering you for a loan or your landlord checking whether or not you pay your bills on time, they get paid off of that transaction. However, because they are holding information of a majority of Canadians, they also have a responsibility to keep that safe. And as you will see later on, they don't always do that. As a matter of fact, we'll look at a case where one of those organizations was charged almost $1 billion for losing customer information. One of the most shocking things that you will see is that the credit score is actually not just a number. It is a judgment that is passed on a scale between 300 and 900. And I say 900 here because Equifax has shown us that in the US they track it to 850, in Canada they track it to 900. It is a judgment on your ability to pay your bills the way you have agreed to pay your bills on a scale between 300 and 900. The higher your number, the better it actually is. However, it gets even deeper than that. It is not just the score that matters. This score between 300 and 900 is divided into 5 separate bands. And as you can see, these bands separate 5 different categories according to the quality of how people pay their bills. As you have seen, one of the credit bands on the credit score is actually named as good. And what does good mean? And does that mean that's the good credit score that you need to get a house? Well, let's dive into what good means. So let's go ahead and address what exactly is a good credit score. And before we get there, I would like to let you know that at the end of the video, we'll be looking at the reasons why the credit score is not enough for you to track your financial progress. So, taking the example of trying to buy a house in Canada, a good credit score will be what allows you to use the government program called CMHC or Genworth to buy a building without having to put 20% down. This allows you to save a smaller down payment and access home ownership a little bit earlier. The credit score that you need for this program, this specific program, is 600. That is a minimum of 600. So it can be fair or it can be good credit, according to the bands that we saw earlier. Now, as we mentioned, 600 is not the greatest of credit, but it will allow you to participate in this program. If you happen to have a credit score less than 600, do not despair. You can always fix your credit. Your credit score reflects the last 7 years of credit interactions. So technically, every 7 years you can have perfect credit. The way this number is calculated is based on primarily five things: the way you pay your bills, how much you have in debt as opposed to credit available. The third is the length of credit. The fourth is inquiries. And lastly, your public records. These are things that may have gone wrong. So let's examine each one of them individually. The biggest one being how you pay your bills. This is 35% of your score. And this means whenever you borrow something and you say you're going to pay it on the first, then you pay it on the first. There are some cases, for example, when you have a credit card, where you have a grace period. The grace period for credit cards is usually 21 days. After those 21 days, if you pay your bill in those 21 days, especially if you pay above the minimum, then you have paid your bill, even if you do not pay it in full. However, there are some loans that are called installment loans that, for example, car loans or mortgages, whenever they're due, for example, on the first, they're due on the first. If you miss that date, you have missed the payment. The second part that has the big portion is credit utilization. This means of all the credit that is available to you, how much have you used? This goes to the idea that you can use credit in a sustainable way without overusing it. The rule of thumb here is that you don't go past 30% of what is available for you to use. So let's say, for example, you have a credit card of $1,000. Do not keep a balance of over 300 because that starts to affect your credit score. The other part that you have is the length of credit. This accounts for 15%. The length of credit is between your oldest account and now. How long have you shown your ability to pay bills as they are agreed upon? The length of credit is so important, and it's easy to mess up because if you happen to start with a credit card, for example, in university or college, and you end up closing it because you got a better credit card, that original credit card had a better length of credit than the new one. So your credit is going to take a hit. So my advice to you is, even when you do not prefer the older accounts, make sure you have at least one account that is more than 7 years old that you can keep as an anchor to your credit score. The other part that is important when calculating your credit are inquiries. Inquiries are of two kinds. Inquiries happen when somebody wants to get information about you. And usually, we assume this is a credit-seeking transaction. However, it's not always the case, because if it's your landlord or it's your new job, that's not a credit-seeking event. However, they still ask. So they have been divided into two different inquiries to make sure that one that is credit-related can affect your credit. The other one that is not credit-related does not affect your credit. The hard inquiries are the ones that affect your credit. Those are the ones where you're looking for credit. And the soft inquiries are the ones that do not affect your credit. Lastly, we have public records. People with a history of bankruptcy or collections are affected by this because in public records, they will show derogatory items, and this can significantly affect your credit. So even when things go really, really, really bad, let's say you lose your job or you lose your ability to create cash flow, make sure you reach out to people you have borrowed from and ask for hardship and other programs that might help you stay on top of your bills. Now that you know how the credit score is calculated, you can actually check it and see what your number is. But did you know that 20% of all credit scores actually have errors in them? If that is jarring to you, it should be jarring to everyone. Because if you're going to get that dream home, or you're going to get that dream job that you have worked so hard to attain, and you realize there's an error, that might set you back 6 months. So what should you do to make sure that this doesn't happen? Well, thank you for asking. The thing that you should do at least once a year is check your credit and make sure that you understand everything that is on there. And when I say check your credit, I don't actually mean just check the score, because the score is very easy to find. Nowadays, apps like Credit Karma, Borrowwell, even your bank app has a score that you can look at. It is not enough to just check your score. You have to check your credit report and make sure that everything that is included in that credit report is accurate. This means your dates, the accounts that they say you have, if things are paid off or not paid off, all of those have to be checked by you to make sure that they are accurate. And luckily for you, and lucky for us all, those two organizations, Equifax and TransUnion, are actually mandated to give you your credit score for free once a year. So once a year, you can access your credit for free and check and make sure that there are no surprises. So make sure that you are going in and checking to make sure that there are no surprises. Now, if you find a surprise, what are you supposed to do? If you find a surprise, there's a mechanism that you can do to challenge and dispute what you see on your credit score. In each of those two organizations, you will find different forms that are given for people in that position where you say, I don't understand why this is on my credit score. Please remove it. And if you do not remove it, please tell me why you put it on. And they will be able to go fix it. And the disputes usually take 6 weeks to 3 months to be cleared off. And you will see the effect on your credit score once that is cleared off. It is important to understand that while we might be close, our southern friends in America have a different credit score than us. As a matter of fact, they have 3 companies as opposed to 2 that accumulate credit-related information. Those would be Experian, TransUnion, and Equifax, while we only rely on TransUnion and Equifax. The way to start if you end up ruining your credit is catch up with the payments. Get back to good standing in your payments. And if you're unable to recover your credit accounts, you can start with cash-secured credit cards that are easy to access, easy to approve, so that you can start building your credit back up. Once those cash-approved credit cards get you to a certain point, what you need to do is get to 4 accounts. If you have less than 4 accounts on your credit report, your credit report is considered to be shallow. A shallow credit report results into a lower credit score. So make sure that you are diversifying the credit accounts that you have to get the best out of your credit situation when you're rebuilding. Credit reports are not perfect. As a matter of fact, they tend to have different weaknesses that are not easily patched. For example, the first weakness is that they don't actually tell you if you're doing well financially, because they do not consider your income, your insurance, your financial education, your confidence in the market, and for that, you need the financial wellness score, which I will demonstrate at the end. The second part is they've experienced significant data breaches coming from the companies that compile these credit scores. For example, Equifax had to pay $700 million in a settlement because of a data breach. TransUnion had to pay $37 million in a data misuse case because it reported information that was not correct. Another example of a settlement was a $11.5 million TransUnion had to pay because of the rental screening problem that it had caused. In another incident, TransUnion had to settle with the FTC and CFPB for $23 million for impeding tenants' ability to obtain housing. And lastly, this year, the U.S. Consumer Bureau fined Equifax $15 million over the handling of consumer disputes. So as you can see, the companies that are entrusted to keep this information have been struggling with doing the right thing. Now, if you want to make financial progress, let me introduce you to a different score, the financial wellness score. You can take it for free. It takes about 8 minutes, and I will link it in the show notes. This one helps you calculate how you're doing over 9 different parts of your financial situation. So use it, it's free for now, and let me know how it goes. I appreciate you, and please subscribe.